I'm David Capablanca, a 7-figure day trader verified by multiple third-party firms. As for my track records, I have previously won second place in the One Best Trader official competition that got me invited to visit the Nasdaq Exchange. In the next 30 minutes, let me show you how I would guide a complete beginner to become a trader who can survive in the markets. Most beginner traders don't make it because they start out with the wrong approach. Not because they're lazy or dumb, but because they're not given the right plan to follow from the beginning. They're either overloaded with random YouTube advice or sold dreams by fake trading gurus who never show you the real work behind becoming consistent. So if you found out about me because of my transparency and track records, I hope I can make a difference for you and the trading community with this video. This is my ultimate day trading guide for beginners in 2025. And I'm not just going to give you theory. You will see real-world trading examples for the concepts I teach. I'm going to walk you through what day trading actually is, the tools for beginners to start practicing trading, the importance of specializing in one trading style, how to find the right stocks to trade each morning, and most importantly, I'll teach you my personal strategy that helped me become a verified millionaire trader. By the end of this video, you'll not only understand how day trading works, you'll walk away with a blueprint that you can use to start practicing right away in a realistic way. What is day trading? Day trading means buying and selling stock within the same trading day. You're not holding overnight. You're not investing for the long term. You're looking for price movements that happen within minutes or hours. Our job as day traders is to take advantage of short-term volatility in the market. We are not trying to predict where the stock will be months or years from now. Now, if you're just starting out, let me clear up one common myth. Day trading is not gambling if you treat it like a business. Let me give you the fundamental framework of how day trading works. First of all, you have a starting capital. That's the amount of money you plan to invest in your trading business. Let's say you start with $5,000. The next step is to define your risk per trade. Think of this as your cost per business transaction. If you set a rule to only risk $50 per trade, that means every time you take a trade, the most you're willing to lose is $50. Here's a quick example. If a stock is trading at $10, you're risking 50 cents per trade. You can take 100 shares because 100 shares times 50 cents is $50 risk. This is how you size your trades. We'll get deeper into how to control your risk later in the strategy section. Now that you define your risk, the next step is to pursue a reward. Pay attention now. If you are taking notes, these are the key concepts to note down. There are two fundamental principles that make trading a profitable business. Number one, risk to reward ratio. You want to make more money in your winning trades than you lose in your losing ones. That's called risk to reward. If you risk $1, you want to make $2 or $3 or more. In our $50 risk example, that means you aim to make at least $100 to $150 when the trade goes your way. This way, even if you don't win every trade, you can still end up profitable. Number two, win rate. This is the percentage of your trades that are winners. Let's say your win rate is 60% and your risk to reward ratio is 1 to 2. That means over time, your winners outweigh your losers. But here's where most beginners go wrong. They take a bunch of small wins and then one undisciplined loss wipes out everything. Let's say you win 10 trades and make $100 each. That's $1,000. Then you take one loss and lose $2,000 because you didn't cut it. Now you're negative $1,000 even though you were winning. So the lesson here is simple. Treat trading like a business. Set a fixed risk per trade, follow it strictly, and then learn how to find the right opportunities that give you a higher reward and a better win rate. If the first chapter has been clear and straightforward so far, please hit the like button for me and comment fixed risk down below if you agree with what I've explained. That's the foundation of a real sustainable trading. And don't worry, you don't need to be perfect. You just need to stay consistent and protect your downside. Later in this video, I'll show you exactly how I apply this logic in my own trading, but first let's talk about the tools. You'll need to actually get your hands on the software, the buttons to click, and the practice you need. Tools for beginners to start trading. When you are at the learning stage, you should minimize your business cost, which means that you want to start with the free tools first, or find ways to make your subscription fees as low as possible. It is also very important to use the right tools to practice, test, and build your system. Paper trading platforms. Free. If you just want to get familiar with how order entries work and how stocks move, you can start with paper trading accounts. Platforms like Thinkorswim by Schwab or TradingView offer simulated trading environments. You can place fake trades, test ideas, and learn basic charting, all without risking money. These tools are useful to build screen time, but they're not perfect. Most of them don't simulate real order execution or level 2. Your fills aren't too ideal. There's no slippage, no realistic fills, and no true bid-ask dynamics. So once you start trading real money, you'll be caught off guard. That's why when you're ready to get serious, I recommend using realistic tools that you will actually keep using in the long run. These are the exact ones I use in my daily trading. I have linked them in the description below, along with the discounts and sign-up bonuses for my viewers. My recommended trading broker, Cobra Trading. Cobra is my broker, and I only feel comfortable recommending what I use myself. They're based in the US, SIPC insured, which means your money is secured, and their services are catered to serious day traders. For newer traders, you can benefit from their competitive trading fees. They charge a relatively low commission on each order, and they also give rebates to traders who use their special REB25 route. Order routing is a more advanced concept, but you will eventually get to the point where you need to pay attention to how your order gets filled. So I won't confuse you too much with advanced knowledge first, but in short, if you're looking for a reliable broker to start trading with a live account, you want to ensure fast order execution, competitive fees, great customer service, and most importantly, being able to trade any stock you want. And here's a bonus. If you're a short seller like me, Cobra consistently has some of the best short inventory on hard-to-borrow stocks. The concept of borrowing a stock will be explained in the strategy section as well. When your strategy depends on speed and precision, don't use a zero commission broker. I recommend you use one that's actually built for day traders. Ask Edgar for stock research. When I say trading as a business, this is what I mean. Before I trade a stock, I always research the company's fundamentals. For stock traders, we'll be looking at SEC filings, dilution history, financials, insider behavior. Every trader will have their own stock research method and criteria. So I like to be efficient when I research, so I've been using Ask Edgar, which is an AI stock research tool. Think of it like ChatGPT, but trained to read a company's financial data and SEC filings. You can ask questions like, does this company have any recent shelf offerings? When was their last reverse split? What's their current cash position? And it'll give you the actual answer from the real filings, not just a guess. This saves me hours of research every week, and it's a massive edge for stock traders. Number 4, flash research for trend analysis and backtesting. Now that you've done your research and know the stock you want to trade, flash research helps you understand how these stocks behave historically. This tool gives me trend data from previous gappers, win-loss probabilities based on my stock criteria, which include float, volume, price, and change in institutional ownership, and how similar setups behave in the past. I use it to build my watch list, check historical behavior, and filter out the tickers that don't match my edge. Flash research is also great if you want to backtest your strategy without coding anything. So in the beginner day trading course, I will only introduce to you these tools, but the most important part is going to be finding an edge or a specialization for you to get started. If I can make a tutorial on how to set up and use any of the tools that I've introduced today, please comment the name of the tool down below and I will follow up with a tutorial video. Let's get into the exciting part, the importance of choosing a focus as a trader. Drop a like if you're ready for chapter 3. This will be a critical decision in your trading journey. You need to choose a niche. One of the biggest reasons why most beginner traders fail is because they try to trade everything. They jump between strategies. One day they are trading options, next week is penny stock trading. Then they're trading crypto, futures, or trying to master ICT smart money concepts because they are seeing those fancy videos on YouTube. But that's not how real traders are made. Every consistent profitable trader I know, including myself, has a focus. They specialize in one area of the market, one style of trading, and a set of criteria that they mastered over time. And this is very important because trading is not about trying to know everything. It's about knowing your game, knowing how to find your best opportunity in the market, and sticking to it so that you can progressively become better in your niche. So in this chapter, I want to explain why having a niche is so important. The niche that I personally chose, and how you can start finding yours. Why you need a niche. When you stick to one strategy, you are developing a habit to look out for a similar and repeatable pattern. It can be a chart pattern, a similar news headline, or a set of similar stock statistics such as percentage of price change, the volume, and the float of a stock. You'll recognize patterns faster, avoid common traps, and gain confidence in executing trades. It also helps you track your performance more clearly. As the business owner, you have a few key areas to watch and track closely in order to know what setups work, which ones don't, and how to fine-tune your edge over time. So if you understand this mindset now, let me share my personal trading style with you. There are many ways to make money in the financial markets, but I personally know many traders who started with a small amount of capital, just like me. I started with $2,000 and found consistency and growth in my niche, small cap stock trading. A small cap stock refers to a publicly traded company with a market capitalization between 300 million and 2 billion. These are usually newer or lower tier companies in terms of their revenues. Many of them are not profitable, and some don't even have real products or sustainable business models. Again, we are day trading, not investing, so there are many small cap stocks that are very tradable every day. Let me explain why. These smaller companies wanted to be listed on the stock market for a key reason. They need to raise funds publicly. Their stock prices can go up and down every day depending on speculation. Because of their low float and smaller size, small cap stocks can move very fast. It can go up 100, 200, and even 500% in a single day, usually on hype, low float momentum, or sketchy news. To put things into perspective for you, let's look at this candlestick chart of Bitcoin. You can see that every day, Bitcoin only moves a few percent. Likewise, if you look at the S&P 500 ETF, SPY, the biggest move you can get in a day is at most about 10%. Now let me show you a stock that I traded this morning, IMNN. This stock moved over 200% in the first day following news that pumped their stock price up. And then it dropped almost 100% in the after hours in one day after the pump. Now in trading, there's money to be made on both sides of the move, on the upside and the move to the downside. We call it the long and short. You can go long in the pre-market off the news. This had a phase 2 news, very strong news, and the stock went parabolic in the pre-market. Then it consolidated, shorts got squeezed, and that's another strategy you can use to long when on the consolidation around the VWAP. Shorts are having a tough time, and it's a tug of war. And the short sellers lost this tug of war, So this is a part of a strategy, a long strategy that I cover at the Friendly Bear University. And then a full-on short squeeze happens in the after hours. And then, lo and behold, they pull an offering at the end of the after hours, towards the end, on a Friday. Money to be made both ways, long and short. And I can make almost 100% in a day. This is small caps, So on the flip side, if I trade short, which means I want the stock to go down in favor of my trade, I can open a short trade or short sell the stock on the price, and in this case, potentially make 100% of the trade because they pull an offering in the after hours. I traded this personally short in the after hours around here, and I covered there. It's a straight, pretty clear read for me at this point. Like, how many times have I seen short sellers get squeezed in the after hours, get margin called because the stock isn't going down? The stock is over 200% up on the day with good news, and it's not breaking down, and it's heading into a long weekend. So shorts don't want a combination of shorts not wanting to hold, shorts being over leveraged, shorts being margin called, and full on squeeze. And I take the short on the breakout of the morning highs, the pre-market highs, and it's a very good entry when it's up that much. And then, of course, they do an offering later. It's crazy. But that's small caps. Because of the volatility and larger price range for us to capture, small cap stocks are very popular in day trading. Now, to make sure that you understand the basics of how money is made in small cap stock trading, comment long and short to let me know that you are following my explanation. Next, enough hypothetical scenarios. Let me explain the reality of what I do as a day trader. So how do I capture a piece of the big move? Nobody can predict the highest or lowest point of a stock, so every trader has their own strategy to try and join the move and capture as much as they can to take a profit. For me, I specialize in a 3-step trading system to short sell pump and dumps. Pay attention now. We are going to break down my real strategy. Let's get into the first step of my trading system, stock selection. This is how I start my trading process every day. Before I take any trade, I need to find the right stock. I'm not randomly clicking into whatever's trending or whatever someone posted on Twitter. I use a systematic process to filter for stocks that fit my strategy. As a short seller, I look for small cap stocks that have already made a big move up. These are the ones I call pumped. These stocks usually appear on scanners because they're gapping up on low float, unusual volume, and often questionable news. So let me show you what I mean using my scanner. I personally use a scanner tool that filters stocks by a few key criteria. First, I filter by pre-market percentage change. I want to find stocks that are up at least 30 to 50% up before the market opens. These are the ones getting attention from traders. Second, I look at the float. I prefer low float stocks, usually under 20 million shares. The lower the float, the easier it is for a stock to move aggressively up or down. Third, I filter by volume. If there's no volume, there's no trade. I want to see unusual spikes in volume that tell me the stock is in play today. And finally, I also look at institutional ownership. Stocks with very low institutional ownership are more likely to be manipulated by insiders, which increases the likelihood of a pump and dump setup. Once I find a stock that fits these filters, they become a candidate for me to look deeper into. And just to clarify, I don't automatically short a stock just because it's up a lot. The scanner just helps me narrow the universe of thousands of stocks down to a few that deserve my attention. From here, I move on to step 2, researching the reason behind the pump. Trading system step 2, researching the pump stock to find the best setup. Step 2 of my trading system is to investigate what caused the pump and what kind of company is behind the stock. I want to know, why is the stock up? What's the story behind the pump? In the small cap world, most of these companies are not profitable. Many of them rely on selling their shares, not selling products to survive. So before I even think about taking a trade, I want to find out, is this a truly positive news catalyst, or is it just fluff that won't sustain the pump price, or even better, no real news at all? This is where my fundamental research process comes in. Let me show you a real stock that I actually traded and how I researched it. IMNN. Using Ask Edgar, I want to know 4 key things. Okay, so one example of how I would use this was, so IMNN, who was the recent underwriter of the offering? So this is like a cool question, you know, so this will save you a lot of time. You ask questions like this and it'll spit it out. And as you can see, there you go. You got AC Wainwright, you know, so it's good to know. So you can use Copilot here to ask questions. When was IMNN's last reverse split? Conduct a reverse stock split, 15-1. Wow, it's a long time ago. Yeah, they haven't done it in a while. So like, okay, but there you go. That's good information right there. What's their cash position? What is IMNN cash position? As of March 31st, 2.9 million. There you go. So good questions right here. Do they have a history? Does IMNN have a history of dilution? So yeah, look right here, the nice detailed response. Look at that, nice. And of course, with Ask Edgar, you have the company profile page, has a dilution section, and it's very nice. You can see the medium risk, previous splits right here, which we just asked the question. It populated it, but you can see it here nice and organized. And you can see the ATMs, how much they have remaining, the expiration dates, the warrants, registered warrants at $2. Very nice, very nice. So you can see it's very useful. So to summarize my fundamental research process for you, if the stock is up on a vague press release or no real news at all, and I find out they recently filed for dilution or they have a history of reverse splits, that's a red flag. That's exactly what I want to short, because I'm not shorting a bullish stock with strength. I'm shorting weakness after an unsustainable pump. This step is critical. If you skip this part and only rely on chart patterns, you'll fall into traps. You'll short a strong stock thinking it's overextended and then get squeezed by real buyers because the news was actually legitimate. I want to avoid those kinds of trades as much as possible. This is how I can ensure a higher win rate. My edge as a trader is to focus on finding the stocks that are up for no real reason. Stocks that insiders are likely trying to pump just so they can dump their shares into retail. Once I find those setups, I move to the final step, technical analysis. Let me show you how I analyze a stock chart to find my entries and exits for each trade. Trading system step 3, technical analysis for entries and exits. The final step in my short selling system is technical analysis. This is where I look at the actual price chart to plan my trade. By this point, I've already screened the stock using my scanner, and I've done the fundamental research to confirm that the pump is weak or unsustainable. Now it's about timing the trade, finding the safest entry, and knowing where to exit. If my trade works out the way I want, I need to know when to take profits. If the trade is a losing trade, I need to know when to cut it and take a stop loss. First, I open both the daily chart and the 5-minute chart. You can see here I got IMNN. Here's the daily chart. It's done nothing for a long time. It's actually one day mid last year, it popped up really big and then faded off. But other than that, it's just been relatively quiet. And then today, it went up like crazy, 200%, over 200%. And we can see on the 5-minute candles exactly what happened. They put out news. I believe it was a phase 2. Biotech news went up in the pre-market, 250%. came down a little bit, consolidated, squeezed in the after hours, and then they pulled an offer. Here's the 5-minute candles. So you can read the 5-minute candles pretty well here. I'll just stabilize all day long around the VWAP. On the daily chart, I look for extreme wicks, reverse splits, a history of pump and dumps, downtrending long-term, etc. What price levels I would mark? Then I move on to the 5-minute chart to analyze the pre-market price action. Key levels are based on the recent days in pre-market. Now, after the market opens, I'll be watching for a very important signal called a backside. A backside is formed on the stock chart when the stock already made its highest point of the day, and now it's starting to reverse and dump on the buyers of the stock. That's my ideal moment to enter. So we are now analyzing this stock in hindsight, but let me share my thought process with you when I was trading it. Okay, so when I was trading it, I don't really trade biotech news, especially in the pre-market. I believe this was cancer related. Let's see, let's double check. Yeah, so this is cancer related news, biotech news in the pre-market. Like I'm not looking to short that. That's usually probably strong news and enough to carry it up. And you know, in the morning, in the regular hours when I came in, it just didn't have enough range. In the 140s, I've seen these kind of stocks go to like, you know, 400 or 500% plus and go for multiple days. So like, I'm not trying to get involved in that. So this is a rare situation where I'll short a stock in the after hours on a Friday because I had a clear read on the stock. I'm like, okay, shorts piled in because it's 250% up. And you know, this is the top gainer on the day, so it's the top gainer. As you can see, it traded 400 million volume, and it's just overcrowded with shorts. So, and the float is 16.8 million. So that's not a small float. So once those shorts get out, then it has a lot of you know, downward pressure that's likely to kick in because of, you know, the new short sellers shorting it, as well as the longs that were long here, they're taking profit now. So that's going to cause also another form of downward selling pressure. All in all, that was my read on the stock. So my clear read allowed me to have conviction to enter an after hours short. And also, it helped that the stock was up tremendously. I think it was up 300%. Yeah, 300% at that point. So yeah, it was a high odds short sell. And to short sell this, you know, you go on Cobra and you locate the shares in the locate inventory, and you know, there's a lot of locate inventory in there. So you pick the cheapest locate and you short it. You know, that's what I did. And as I was shorting this, I'm only, you know, in the after hours, I'm keeping my risk low. So my position is just a few thousand shares at a time, and I'm rotating it on the way down. I'm recycling it on the way down and re-entering, just in case it's gonna squeeze on me. But it's a very small position, and I'm just in and out, like very, very nimble, because I don't want to be in this trade. I don't want to be involved in the after hours on a Friday, you know. So at the same time, when the trade is like, when it's screaming at you, and I was not part of any of this, so throughout the whole day, it gave me the, you know, the mental clarity to be able to trade it comfortably. My stop loss going into the trade, it was just a dollar amount that I was, you know, that I'm willing to risk, and it's 1 or 2 days worth of trading profits. That's what my stop loss is. Let's take a break here from the actual trading. If you recall, we started the video by understanding how to operate day trading like a business. Then we cover the tools that you need, and then we learn about the importance of having a specialization in trading. And finally, you get an introduction to my 3-step trading system. Now let me be honest with you. You won't be a profitable trader just because you watched this 30-minute tutorial. But if you have been following my thought process, you have started to develop the correct vision for your own trading career. The mindset is of the utmost importance. We talked about the 2 principles of profitable trading: risk to reward and win rate. And then I walked you through how detail-oriented and systematic you have to be as a day trader. Now, regardless of which style of trading strategy you choose to pursue, the 3-step framework will always help you improve your chances of surviving in trading. Because you are not here to gamble. You are here to find your system that works and then practice how you execute it every day, improve your system, and finally rinse and repeat your winning strategy. So if you have reached this point of the video, congratulations on taking your first step the right way. Next, I'm inviting you to go to my channel and watch my individual trading tutorials to further understand how my short selling strategy works. I also have live trading examples for my specific style of trading. Your learning journey starts here. Remember to practice what you learn, so make use of paper trading or trade with a very small amount of capital. You can buy and sell just one share each time to experience the reality of trading. If you like my style of teaching, subscribe to this channel for more realistic trading content. And here is a playlist of all my trading tutorials for beginners to learn more about advanced knowledge for free.